All right, ladies and gentlemen, this is Todd here reporting live from the living room. This is my first broadcast discussing Forex. Well, my first broadcast period. So might be a little choppy, but we're going to get through it and we're going to discuss some charts, some Forex, some setups, some things that I go by, some things that I do, some ways that I trade, a couple of strategies, and see how well it might go. And this isn't trading advice. This is basically just me discussing, my analysis and the way that I trade. So, as we already know, trading carries a certain level of risk. We are responsible for our own risk, the same way we're responsible for our own reward. So by no means is this any type of signals that I'm providing, any type of trading advice, just my way of trading. And hopefully we could all learn and benefit from it. So as we could start with this euro dollar chart, I have it on my screen. It shows I'm sharing it. And again, I'm new to this, so it says I'm sharing it. So I believe y'all should be able to see it too. This is my euro dollar chart. And my big thing is I'm a trend trader. And when it comes to trend trading, I believe at the same time, I believe that the trend is your friend, and that's, cliche, and everybody's been saying that for a long time. But at the same time, on the other side of that coin, trends can get exhausted, and trends can stop and turn around at the drop of a dime without any notice at all. So even though I am a trend trader, I respect support and resistance levels, and I try to recognize swings as well. So if I see a trend turning around, I'll be the first to sit on the sidelines and wait for that to recognize if it's a pullback or if it's actual reversal. And there's a few ways that I try to confirm that, a few things that I do to try to confirm reversal versus pullbacks. But we'll see if we could discuss that and get through that part too. All right. So I'll try to start from the top of what I do when I first, pull up a chart that I'm interested in trading in. I'm going to use the euro dollar. Reason I'm going to use this chart because this is the mainly traded currency pair in all of Forex. Out of all of the pairs, I'm not going to use percentages because I don't know. But I know a great deal of trades are done in euro dollar, way more than any other currency pair. And I'm not saying it's the best one. I'm just saying it's the most popular. It's the one I'm in right now. So I'm going to use this as the example. All right. So with that being said, looking at this chart, and what I normally try to do is I'll go to the daily chart because my big thing is finding direction. And I got a whole bunch of stuff on this chart right now. So I'm going to take this stuff off so we have a clean chart to get an idea. Probably make it easy to see what I'm talking about. As a matter of fact, I'm going to put that back and just pull up a new euro chart. Let's see. And while I'm doing that, I'll just say that finding the trend is more recognizable on the higher time frames. Because the lower time frame you go, 1 minute, 5 minute, 15 minute, 30 minutes, those might be good charts to enter a trade after you. But it's real hard to find a direction on those lower time frames because you can't get the big picture and see what it's actually doing. And to confirm that there's no support and resistance, and make sure you're not trading into the support or resistance at all. So early in the game, having my first hookup, trying to pull up another chart, and it looks like it's buffering on me. Here it comes. All right, so here's a clean euro chart. Looking at the daily right now. All right, so you don't have to be a professional long-time trader to know that the direction of this is down. On my screen currently, this is showing from September to today. It's a downtrend. Let's go to the weekly. All right, the weekly shows it's been going up. I'd say May 2014 created a top. And from that point, we've been going down. We don't know how far it's going to go down. We don't know if today's going to be the last day that it goes down. We don't know any of that. We just know that trading is about probability. So unlike rolling dice, where you just roll the dice and see what turns up, trading is probability. Dice is probability too. Like trading is probability. And what I mean by that is we don't know. Nobody knows. If they tell you they know, they're lying. But we could use probability to make the likelihood of us being profitable higher by doing what the chart is telling us. So in this case, since this is a downtrend, all scenarios in which I trade this pair for the time being are going to be shorts. I wouldn't want to go long at any time in the short term, because price has been going down. This is March. For 9 months. This is a 9-month trend. So the likelihood of me going short and being right is much better than the likelihood of me going long and being right. Why would I trade long? This is a weekly chart. And I don't know how many weeks this is in this downtrend. I mean, I guess I could figure it out based on it being 9 months. But if you look at these green candles, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So since this downtrend began, we've had 13 weeks where price went up. Far more down weeks than we've had up weeks. Even currently, we're in the middle of 3 straight weeks of this trend going down. All right, so I guess we've established that this is a downtrend, and that's really the first thing I do when looking at a chart. I'll go to the higher time frames, the daily, the weekly. I mean, rarely the monthly, because the daily should tell you the trend. If you're confused on the daily, then definitely the weekly. I mean, if you can't figure the direction of the trend off the daily and the weekly, you could go to the monthly, but I say if it's not clear, like black and white, which direction is going in, then you just need to look at another chart. Leave that alone. All right. So after we've determined which direction the trend is in, at that point, I'll go to the 4-hour. And I'll start looking for opportunities where I can enter into this pair. And what I want to do is I don't want to enter when price in the middle of price going down. I want to find an area where I can enter the trade where we might be touching on one of these resistance levels. Because if I can enter in on one of these resistance levels, that's me getting in at a better price, as opposed to trying to enter in on a bottom area and catching it in an area where the downtrend is already exhausting and it's taking a breather back up. So I'm looking for levels. So if I wasn't already in this trade, I wouldn't get in right now, because as you can see, we have an extreme down, and we kind of like, we want to see where we maybe have 3-4 candles or so that's going up. This way you can get in at a price better than trying to get in while the trend is already going down and risk getting caught up in an exhausted trend that's ready to take a breather and turn to the upside temporarily or even for the long term. So first, now I'm on the 4-hour, and on this chart, I really don't see anything as of right now that I would get in. So if I don't see an entry in here, I'll go down to the 1-hour. And that's probably the lowest I'll go to try to find trend direction. I mean, once I'm in a trade, I'll mess around with the lower time frames to see what each candle is doing if I'm sitting here watching charts. But as far as placing a trade, I'm going to look at the 1-hour and to place the trade. So looking at this right here, support and resistance is a big deal to me. And what that is at the bottom, resistance is at the top. So right here, I'm using an indicator called Donchian channels, and it helps me recognize support and resistance. I have it set to 20, which means it's telling me the highs of the last. So of the last 20 candles, the high is $1.1143, 1.1143, and the low of the last 20 candles on the 1-hour is 1.1054. So primarily, I like to enter into a short when I see that price is towards the top of the Donchian channel. There's a strategy that I'll use when it's at the bottom of it too. When I see that it's beginning to make a new low, I'll enter into it at the close of a new low on the 1-hour. So in a case like this, right here would have been great to get in. And it's easy to say that in hindsight, but I actually did get in. And I'm in this $0 trade right now. I'm using TradingView. I use FXCM to trade, but I use TradingView to look at charts and analysis because I think it's a wonderful tool to, you know, do your analysis on. I used to do it on FXCM, but I had a lot of problems with the charting as far as getting timed out and freezing and things of that nature. So right now, being that I'm in the $0, I got in this trade at 1.1301, and with it being at 1.1057 right now, I'm happy with this trade because that was what, over 300 pips ago. So I can't complain. Now, about 300 pips ago, maybe a little less than that, but the trade is profitable. So that's the point. Right here, I have a moving average. This is a 200 moving average. This is also going to give me confirmation of the trend direction. If I'm shorting a trade, I like the fact that the trade under the moving average. If it's a downtrend and decides to come close up to the moving average, that's even a better shorting opportunity in this scenario. If it was on top of the 200 moving average, then I'd want it to come down towards it and look to go long. on a pullback. Pullbacks is, I mean, I wait for pullbacks all the time to enter into trades. I wait for pullbacks to add to positions and things of that nature and everything. So in this type of scenario, like I said, I use the Donchian channels to find a pullback, wait for it to hit the top of a channel or even come close to it. And that's primarily when I'm going to enter into a short at the top of a channel. Now, once I'm in a trade, I was speaking with one of my partners on the trading floor. It's a trading floor that we use, and we use that trading floor to, you know, go over trades and discuss different scenarios and setups with each other. And one of my partners was telling me he's having a problem figuring out how to take profit and how to get out of trades. Now, my whole thing is I want it to be repetitive. I wanted to get it be as close to me doing the same exact thing from a rule standpoint on every single trade, because you don't want to trade with emotion, because when you trade with emotions, it causes a lot of issues, because especially when you're dealing with money, because you don't want to lose profits that you've already gained, and vice versa. If a trade is going against you, you don't want to lose a lot of money. So you're thinking with your heart and your emotions as opposed to following a specific set of rules and setups. I've already went over, you know, vaguely, and again, this is my first broadcast, so I guess it'll get better. But I went over vaguely how I decide to enter into a trade using the Donchian channels. But once you're in a trade, how do you decide to take profit? A lot of people, and even when I first started, used to look for risk reward ratios, maybe 2 to 1, even better 3 to 1. So you know you're risking less than the reward you would receive if you're right. I still look at risk reward ratios to make sure that I'm not trading into any type of support or resistance. So for instance, all right. If I go to the weekly here, maybe even a monthly, so I ain't gotta make it so tight. All right. So you don't want to trade into support or resistance. So that's why people look for good risk reward ratio. So for instance, in this scenario, looking at this weekly chart, get a horizontal line right here and put it right here. See if I can make it darker so it'll be easier to see. All right, there's a green line I just put here, and I call it this support. And the reason it's called support is because you see price has come down to this line a few times, but bounced off of it and respected it. That's support. This time it broke through it. So it would have been okay to trade into support. But what I mean by trading into support is you want to wait for confirmation and for a break. I wouldn't want to, if I'm down here, right above the support, I wouldn't want to short it right here because I'm not clear that it will follow, as opposed to bouncing off of it the same way it's done the 3 previous times it did it. So I'll try to wait for confirmation, and confirmation would have been a close below it and this continuation here. So somewhere within this wick would have been confirmation for me, giving me enough confidence to know that it's okay to short the pair, which is what I did. Okay. So the point that I'm making is that's risk reward right there. Risking, I would be risking all of this if I before for this for no room for reward because it could have possibly bounced back. Now, what I do to determine how I'm going to get out of a trade once I'm already in it is I'll use this indicator. And I got this from one of the books I read from Turtle Trading. And it's ATR. I'm scrolling down like it's not up here. And ATR stands for average true range. I'll pull that up. Right now it's set to 14. Counting the last 14 candles to see what the average amount of pips it has moved over the last 14 periods. So if I go back to the 1 hour, which is kind of like the smallest time frame I'll go to pick an entry, I want to change it to 20. So I can see the average movement of the last 20 pips. All right. See, so it's kind of like a volatility indicator because even though Forex doesn't have any true volatility indicators, I mean, I've seen people try to create some, but ATR is fine for me. So what this is telling me is over the last 20 periods on the 1 hour chart, it averages 16 pips per candle. Well, at this point, it's 13 pips per candle. So once I'm in the trade, the fact that I know that each of the last 20 candles is an average of 13 pips wide, it lets me know how much breathing room I need to allow my position to have to not get stopped prematurely by a pullback that is less than the average true range of the last 20 period. So since I know that I need 13 pips of breathing room, what I do is I give it more than what the average true range is. 2 times the average true range, which is max, which means in this case 26. I'm going to give it 2 times the range, which means my stop will be trailing my position by 26 pips. Hey, sometimes you might get stopped out before you even make a profit, but that's the cost of trading. Sometimes you're going to get stopped out without a profit. Hey, if you can't handle that, then trading isn't for you. But for those that can, if you give it 26 pips to breathe, you're doubling what it needs, because the last 20 pips is average 13. If I give it 26, I'm giving it 2 times what the last 20 candles were. So in this case, being that price is at 1.1052, going down even further, by the way, I know that my stop that I'm going to trail this profit with is going to be 63.73, 79, 1.1079. That's right? 26 pips away, 53, 63, 73, 4, 5, 6, 7, 8, 79. Right. So my stop being 26 pips away would be at 1.1079. And I know that as price comes down, I can keep it 26 pips away until the ATR changes to a different amount. Then I'll trail it by 2 times whatever the amount of that ATR is. So I'd feel comfortable with that. I can go to sleep knowing that I've given my position 2 times the average true range to breathe. Another thing you can use is the top channel here of your Danchin channels. If you're in a profitable position, if it comes back to the top of this channel, which in this case is 1.1143, then you get out there because it's hit the top of your channel. And that would be fine with me. I got into this at 1301 or something like that. So that would be fine with me. I've made a lot of pips on that trade. So I wouldn't even be mad if it came back and hit my 2 times ATR or the top of this Danchin channel. But if you do that on every single trade, you're not questioning yourself, well, I made a lot of money. Should I get out? Should I stay in? That's trading with emotions. You're just making the decision that regardless of what pair it is, what the scenario, what the situation, I'm getting out at 2 times ATR or the top of the Danchin channel. And really, you don't even have to do 2 times ATR. You can do 1.5 ATR for real, as long as it's bigger than what the ATR is, then you're giving it more room. You're giving it room to breathe. How tight you want it to be past those 13 pips of breathing room is up to you. Then it depends on how you measure your risk, how you do your analysis and things of that nature. But once you calculate your risk and how much you're willing to risk on this given trade, it's easy to know how much you're going to lose before you can determine how much you're gonna risk before you even place the trade. And those are the traders that can sleep at night, the ones that know, hey, how much am I at risk of losing if this trade goes wrong? Some could risk to lose $10 on the trade. Some could risk to lose $500 on the trade. It's all about how much capital do you have in your account, what percentage you're willing to risk on each trade, and things of that nature. I mean, me personally, I'm at anywhere from 0.5 to 2% on a trade. I'm always in there somewhere when I'm determining how much I'm willing to risk on my total account. Anywhere from 0.5 to 2%. And I give it that wiggle room based on how confident I am in my decision I'm making on taking that in particular trade. If you're never certain, you never know for sure, but if I'm real confident, hey, 2%. If I'm not that confident, but I think it might do this, 0.5%. The wiggle room you give it determined by how confident you are. So that's how I'm exiting the position. ATR or the top of the Danton channels. In this downtrend, if it comes up and hit that, take me out to trade. Cash me out. Or if I'm using the ATR, which is now moved to 16, I think. Hold on. Oh, no. I see what's happening. No, it's still 13. Okay, I thought we had some movement. But yeah. As long as it's bigger than the ATR, we good. And I think that's really the point I was trying to make, and I was trying to explain this in the chat room, and I didn't really know if I was getting my point across too well. So that's why I felt like it was necessary for me to come on here and broadcast this so I can give my fellow partners an idea of how I get in and out of trades. And, you know, I like doing analysis. I like talking about my charts. So I might do a few more of these broadcasts. For now, so this being my first one, like I said, it's choppy. I know it is. Might have been a little all over the place, but just like anything, you do it enough, you'll get better at it. So I'm not really worried about that. But hopefully I got the point across when it comes to finding the trends, entry, and exits. As vague as it may have been, I might be a little bit better each time I do one of these. Maybe I'll make an outline of topics and, pinpoint things that I want to talk about, so it'll be more in line and more organized. But hopefully, like I said, hopefully I got my point across. My name's Todd Coleman, signing off on my first broadcast. Hope we could have taken something from it. Hope we took a little bit from it. And I'll holler at y'all next time. Peace.